15 Minutes with Marlon, trending news and headlines.
Hey guys, welcome to 15 Minutes with Marlon. I'm Marlon Gomez. Hope you guys are doing great today. And we're gonna run through a couple questions today that we've seen the community ask. And I wanna get feedback to those questions. And then we're gonna get into some of the headlines of the day. So Alex, take it away with the first question.
Fresh out of college, how do you start a CRE?
Listen, this is a question that I think is on a lot of young folks' mind, right? You're fresh out of college, you just graduated, you're looking for opportunities, you're trying to, dive into different sectors maybe of real estate. What do you do, right? So you have your resume, you have your, you throw it on Career Builder, Monster.com, all those things, but what do you really do? How do you become a part of the commercial real estate community? Listen, if that's something that you enjoy doing or think you're gonna enjoy doing, I would highly suggest, first and foremost, jump on LinkedIn, start reaching out to the different people that are active, right? And that you see them posting on LinkedIn, and reach out to them and say, listen, just graduated college. I think I can bring a lot of value. You're willing to intern for free. You're willing just to work, spend the time, whatever it takes, whatever is required, that's what you're gonna do. Right? You're going to help put together some graphics. You're going to help put together some market data. You will help underwrite, a couple projects, a couple of transactions, anything that you can do, right, to bring value. But I would say do it in a very, genuine way. Ask for nothing in return. Say, what deal are you working on that I can help you with? No strings attached. You don't have to bring me on just yet. Go out there and just gain knowledge, gain some experience, right? That's the biggest obstacle that the young folks today are going to have to overcome, is obvious experience, right? So the only way you do that is by actually being in the trenches, getting your hands in there, as they say, putting on your boots on and getting to work. So reach out to different people on LinkedIn, reach out on other social media platforms, and find out. Say, hey, how can I help? How can I contribute? I have experience, I went through, some schooling, maybe it's some schooling, maybe it's no schooling, maybe it's, a combination of, master's degrees, who knows? The point is, reach out and offer your service, offer what you can bring to the table. Say, I'm willing to do it for free. Here, by the way, here are some things that I've already started doing. Maybe you go on like a LoopNet site and you find a property, right? And you underwrite it and you send it to maybe some of the brokers, some of the agents. Say, look, here's my underwriting for this particular property. You have no financial interest whatsoever in it. All you're trying to do is bring value to others so that they can see that, you can actually contribute. So that's probably the first thing that I would do. All right, next question.
I'm looking for a mid-level move. What can I do for growth opportunities?
So we fast forward to, that bracket of, let's call it 35 to 45 year olds that already gained some experience, already had opportunities along the way, but you may be feeling stagnant, or you maybe have been laid off recently. So what do you do, right? You take all that experience, right? You bundle it, you make some videos, you throw them again. It's fairly similar. Put it on LinkedIn, put it on the different social media platforms, send out content, send out, some of the experience, data, any underwriting that you've done in the past, so others can take a look at it and see that you're a person of value. Give. I would say give as much as you can, especially if you just got laid off. Give even more. Spend your time giving to others, and I guarantee you that's going to help bring more in the long term. I know it's very stressful and difficult times, but you have to find, how you individually can contribute to a corporation, an entity. Find out who just closed on a deal. Find out who's looking to sell a deal, and how can you add value. Even if that one particular transaction, you work for free, that's okay, right? Because you gave some value, you build a new connection, you help somebody else out, and you do that over and over. Everybody's just sending resumes out there. Tons of resumes are circulating online, right? And then how do you break through that noise, right? Yeah, one thing is you see the resume and you look through it, you think, okay, great, this person might be, but how do you get an opportunity to go above the entire pile, right? When we talk about millions of Americans that are unemployed, a lot of them are also in the real estate world. So how do you separate yourself? Now, it's a good opportunity to maybe start an advisory company, right? So that you can start advising others, right? Based on your experience, your track record, your knowledge. But you got to put things together. You got to get out there. Don't just sit there. The old guard is it's not useful anymore. Things have certainly changed, and we have to change with the times.
In your twilight years, how can you contribute to CRE?
I think as someone that has gone full circle, right, and is in their twilight years, right, what can they do? They can give advice. Listen, the advice that they have is priceless, right? The advice, the things that they've lived through, most of us have not lived through yet, and even the younger generations certainly have not lived through. So they can form advisory companies, consulting companies, right, that can bring in a fresh set of approach because the experience that they have is valuable. So I would say create an advisory firm, create content, put it out there, reach out, LinkedIn, Facebook, right? Reach out to your contacts, and it's going to take time, right? But as long as you're being, positive and you're giving value to others, 10 things that are extremely important to keep in mind as you're closing a transaction, 12 things that you need to do during your negotiating process. Just throw things out there like that, and I guarantee you, you will connect with others and they'll connect back with you.
Why are small businesses being optimistic about the future as they continue navigating COVID-19?
So I think we should all be optimistic about the future, right? This is a very difficult time that we're all living through. However, this too shall pass. These storms will go away. It's going to take time. What happens during this, difficult time? As a small business owner, and it sounds like, they're being more optimistic for the future. I think we should all be a little bit more optimistic for the future, right? Don't let your guard down. If your business is struggling, get out there, go back to the grassroots, marketing style of things that you used to do, put together content for people, put together, loyalty programs for your customers that you had from back in the day. I would just say continue. Don't quit on your business just yet, because things will be getting better. In the real estate market, we're seeing stability through multifamily. We're seeing difficult times in retail, hotel. But if those operators can manage to hold through, I think it's going to be a lot better for them down the road. So I wish everybody really well there. Next headline.
Why are workforce housing experts saying they don't see rental rates dropping?
What we're seeing, multifamily, and I'll just keep repeating this over and over again because it's true. I'm living it. I'm seeing it. We're also seeing news and headlines, discuss about this particular topic. But rents are not decreasing. Rents are not softening. We may see some over the next couple of months, but they're going to remain pretty steady. And I tell you why. Right? Everybody needs a place to live. That's a given. We've said that time and time again. People, the number one thing on their mind is roof, shelter, right? Everybody wants to protect the roof and shelter. And how do you do that? By paying your rent. If you do so, it's one less thing to worry about. Yes, there's been a lot of unemployment. However, I think employment, jobs are going to open back up again. And a lot of the country is starting to see that. Specific hotspots throughout the country are still being challenged. But I believe in the next, couple of weeks, that's also going to slow down and things are going to start improving somewhat. So we're not really going to see the massacre that everybody said we were going to see in multifamily. If anything, we're seeing the opposite. We're seeing strong collections. We're seeing, folks just making their rent payments, whether that was through some of the PPP funds or whether that's, figuring out other ways to bring in the income to be able to cover the rent. We're seeing that across the board. So I think multifamily is going to remain healthy.
How do multifamily investors see property value going forward?
So what do we see as multifamily investors, right? What do we see in terms of property values? If interest rates, which we all believe will maintain themselves very low, so this will be a low interest rate environment over the next couple of months, extending into next year. No one sees interest rates taking it a big climb, upwards anytime soon. So what does that mean? That means that it's going to cost a lot less to borrow funds to buy property. It also means that property values are going to remain. And if anything, because there's a lot of pent up demand, right? There's a lot of capital on the sidelines waiting this out. Not a lot of transactions have closed, but capital is there waiting. Property values, because there may be a little bit of a bidding competition later on, if anything, property values may be increasing. Listen to me again. Property values may be increasing. Okay. Now, I'm not saying they're going to increase substantially. They may remain where they are. My opinion is they will increase slightly over the next few months, especially multifamily. On the inverse, you're going to find other asset classes, retail, hotel, some office, those type of things. Their property values are going to decrease, right? So on the multifamily side, we're going strong. Values will stabilize, will stay where they're at, or will slightly increase. So I think it's a positive to be in multifamily right now. Obviously, living it, breathing it every single day and understanding it gives me a really good insight, handle into where values are. But that's just part of the business. So, all right, next question, guys.
How long can COVID impact the multifamily market?
So COVID has been impacting the multifamily market, since COVID started, right? There's different things that have happened. There's some properties have had, eviction bans. Other properties have seen, not any positive rent growth. Depending on the sub-market that you're in, right, you're going to have, effects. Every single property is being affected right now. However, some are performing a lot better than others. The ones that are performing a lot better are in B plus neighborhoods that are B type assets, or are A plus brand new communities in B type locations. But every single one is being affected. That is the bottom line, right? That is a fact all across the board. However, you always have to look at, when you invest in any vehicle, whether it's real estate, whether it's stocks or bonds, you have to look at what's the long-term outlook, right? So in real estate, in multifamily, the effects are being felt, but all the data that we're getting back is showing that everyone, or the majority, 95% plus, are paying the rent on time. Maybe some are having issues, and instead of paying on the 1st, they're paying on the 15th, they're paying towards the end of the month, but frankly, they're paying, and that's very important. When we're looking at the entire year's operating history of the property, if payment was collected, and it might have been late, right? So here you may waive some of the late fees, but if payment was collected in that month, it's registered and it's collected, that's a plus, right? As an operator, we may not be collecting late fees because we've waived the late fees, but if that's the worst that happens to a property, that's actually an excellent sign, because other properties like retail, they've stopped paying. Some of the retail tenants have sent letters to landlords saying, we can no longer continue to operate or continue to pay. That's not the case in multifamily. So we're seeing a lot of good strength. We're seeing a lot of good trends, now and into the future in multifamily. So hopefully it continues that way, even, with some minor bumps along the way. We think it will. We're seeing that with, with the last, 4 months of the virus, and, hopefully things start becoming a little bit better. But if not, we'll continue to weather the storms as best we can, and as it's being done so far. So, all right, that's been Marlon's 15 minutes of the day. Wish you guys well. Hope everybody's doing great. Take care.
15 minutes with Marlon, trending news and headlines.